All right, ladies and gentlemen, welcome back to the WOW Summit Hong Kong 2023. So I'm Xavier and I'll be your MC for this stage. So welcome you all. So coming up next, we're going to have a DeFi fireside chat. But before that, I would like to give a big thank you to Invest Hong Kong, Hong Kong Tourism Board, and also Hong Kong Financial Services Development Council for supporting our event. And also a big shout out to our host, Uvercon.vz, and also MageSpire. And also thank you our general sponsor, OKX. And now without any further ado, we're going to have our fireside chat on DeFi tools that help with seed round fundraising. And now let's welcome Alexandra Shidagubald, Genesis member DAO Envelope. Let's welcome Alexander. And next, let's welcome Sergio Argento, Chief Strategies, also co-founder, Apollo 42 Impactor Lab. Let's welcome Sergio. Please be seated. And last but not least, let's welcome our moderator. Let's welcome Jason French, Head of Business, Blockpour. Let's welcome Jason. All right, over to you, Jason.
Okay, can you guys hear me? All right. Well, it looks like we actually filled the seats pretty good here. We were a little bit afraid earlier that we're not Vitalik, so we didn't really have the crowd. So, all right, guys, thanks for being here today. The topic of our discussion is going to be around seed round fundraising in crypto and the tools and the tips that founders need to know to raise money. So what we're going to talk about is pretty interesting. There's a lot to unpack. But before we get into it, I want to pass it over to the panelists to do a quick self-introduction and tell us a little bit more about what they do. So Alexander, tell us about yourself and tell us about your company.
Yeah, so my company is a DAO, so we are 100% decentralized, only in Web3. We are not incorporated anywhere. And so we built a new generation NFT for protocol for this to make an NFT functional, not as it used to be like JPEG or any other stuff. So we make them financial, executing the cases from gamify to even cross-chain transfers bridgeless. So that's what we do in short.
Excellent, thank you. Okay, over to you, Sergio. So please tell us a little bit about yourself and what you do.
Spent in Hong Kong 22 years. Witnessed a lot of ups and downs in the old school businesses. I'm a former investment banker who decided to jump back into the startup sandbox 8-9 years ago. And I'm pretty new to Web3. A couple of years ago, one of our portfolio companies actually started like convincing us, guys, you will be able to find a lot of synergies if you let us into your space tech startups. Okay, that was a completely different alternative way to the Web3, but now I'm here and I understand the true industrial use of Web3. Completely don't see NFT art as an asset. So I'm that like a pessimist, I would say.
Okay, thank you, Sergio. Great. And my name is Jason. I'm head of business at Blockpour. Blockpour is a data and analytics firm, and I have been into crypto since 2013. So this is my third bear market, I think. So I've been in and out of the ebbs and flows, the ups and downs. So, well, with that being said, let's get into the first discussion topic, and I want to continue on that thread. So, as a founder looking to raise money right now in Web3, obviously things have changed a lot from the bull market to the bear market. During the bear market, in your eyes, like what has changed for founders? Like, what impact is it having on Web3, founders trying to raise capital now in the bear market? And what are some tips and things that you guys could share with the crowd?
Definitely, it became much harder to raise funds because VCs can be now more selective. Lots of startups, much more than it used to be previously, and they can select best ideas. And for founders, I think it's not enough to deliver good ideas, good execution, but maybe to give good tools for VCs for capital management, because we've seen previously when the market went down, some of them were out of liquidity and they need to extract it, and thus we also created the tool for them that can let resell allocation without dumping the market, like make a new style of derivatives where you can pack tokens inside NFTs and make them tradable and thus unleash vested liquidity.
Yeah, and you raise an interesting point there too about management of capital. So we were talking about this before we were up on stage, and I think a lot of people were caught, I guess, unprepared when FTX blew up. Sergio, do you have any tips for founders, managing their treasury and best practices, and what tools, would you recommend that founders use?
US dollars, euros, real estate. So I would recommend those very conservative tools.
That's not very crypto.
You can you can digitize it.
Okay.
So basically, the bear market is a great thing to see who doesn't wear the pants. It's always like in every industry and in every time it happens like this. And at the same time, the bear market is a great opportunity for those who would like to consolidate all those pantless guys and girls and build something on them.
Yeah.
So it's a great time for scavengers who would be able to pouch great minds, great resources, market shares. For the scavengers, it's a great opportunity. I advise them to scavenge radically. For those who are potential victims, guys, collapse.
Yeah, I mean, it's interesting. Every time you have a protracted bear market, you seem to see like a washout of, kind of the lower quality, I guess, projects, if you will, and the ones that end up surviving kind of rise to the top, and they're the ones that are building, real use cases and have a real business model, and they come out pretty well on the end of the bear market into the next bull market. So I guess the next thing that I wanted to talk about is something that a lot of founders in Web3 have to discuss and think about is, should you use a token in your business model and in your raise, right? So this is kind of a controversial issue, I think, for a lot of companies, and it's not an easy decision. Blockpour, when we were looking at our fundraise and just our business in general, we didn't have a use case directly. There was no utility need for a token, so we went against having a token because it didn't make any sense for our business. But while we were fundraising, it actually came up pretty much every single conversation. People would say, "So you don't have a token yet, right?" And if you didn't have a token, a lot of Web3 investors actually weren't interested because they were looking for that quick, like, they like to know exactly when the unlock is and pocket a quick 5x or whatever that might be. So how do you guys see tokens and their utility in fundraising? Maybe Alex, we'll start with you.
Yes, so at the instance, we plan to launch the token, but actually we see good projects like Uniswap and Pancake, for example, when they started without token and finally they offered this utility. But for our point of view, the token is a kind of standard for the market, and mainly investors, especially Asian ones, won't talk to you if you don't have a token or you don't plan to emit the token. Even if you don't have exact utility, or you say them that, okay, I'll find the utility, here will be the token, the allocation will be limited, and for example, 1 billion and nothing more, and then you're more likely to raise funds than saying that I'm building the protocol, and maybe someday, if I find utility, I will release the token.
Sergio, do you have anything else to add on tokens and fundraising?
One of our startups successfully raised almost $500,000 in April, but it was April, just like right before.
Right before, yeah.
And I was again as an investment banker. So when I checked the document against the startup received $500,000 US, I was wow. So it's an intention to issue tokens.
Okay.
One day or another. You can guess that the tokens are not issued yet.
Right.
And especially for DAO, you have no choice. if you raise only token.
Yeah, no choice if you're a DAO, right? Okay. Cool, guys. Thanks for that. I mean, it's never an easy decision. I think another thing to consider too when you have a token is that sometimes the issue with a token in a business is that the business focuses so much on the token and the token price, and it can actually take away from building the business itself. So it's another thing to consider if you guys are thinking about using a token in your fundraise. Okay, so I want to switch gears a little bit, and I think Sergio, we'll start with you on this one, and I think you have experience in this. How do you see the role of incubators and accelerators, helping startups, and what kind of like how if you're a startup, like how do you find the right partner, and what kind of value do incubators and accelerators offer to startups?
Basically, it's free, almost free education, but that free education is not free at all. So you waste a lot of time by being a part of an accelerator or incubator. It's a great business model for the early accelerators or incubators like 500, Plug and Play, YC, because they started really long time ago.
Right.
And they are not accelerators anymore. They are funds. So like huge conflict of interest, but they know exactly what they do. Hundreds of accelerators who decided to follow them, they're close to bankruptcy. They're not making money unless they verticalize money with that expertise and experience how to choose the right cherry.
Right.
To startups, of course, if you haven't failed 2 or 3 times yet, so you are not that sacred holy cow to any type of VC who is looking for such animal badly,
Right.
it's a great idea to apply for acceleration
Yeah.
program and to fail as fast as possible, 2 or 3 times.
Alex, do you have any experience or anything you wanted to add on this side of things?
I haven't personal experience with accelerators, but me personally, before this envelope DAO, I have failed 2 times with startups. So
Yeah, I mean that's pretty common, and yeah. So we work with an incubator and accelerator, BCW Group, for our company. They put in the angel investment, and one of the things that I think you can get a lot of value as a startup, and I think of this as like a tool, is that they offer a lot of and other good incubators and accelerators. They offer a lot of support in things that sometimes founders aren't necessarily great at or don't want to spend time doing, and maybe that's some of the admin work, maybe that's some of the legal work, HR work, and getting all of those things done, and so you can focus on building the business, and I think if you find the right partner, then it can add a lot of value as a startup. So I think that's pretty important. Make sure you vet your partners very very closely before you decide to work with them. Yeah.
Yes, in the situation when nothing changes, that approach is critical, is great.
Yeah.
Fortunately, we are not in that ideal simulation. Fortunately, everything changes.
Right.
So you cannot rely on somebody's expertise. You cannot outsource it. Like, yeah, for like if you're like first, second, third form in the like whatever school, no problemo. If you really want to create something great, you better learn everything yourself. You better learn how to build that distributed knowledge among your team. Experts, mentors, I'm very sorry.
Well, I think that's a good point, though. You don't want to become too reliant on these experts and mentors because, then if something changes, then you're left with a big hole in your company. So it's definitely wise words to make sure that you're upskilling and learning these things as well. Yeah.
Give it an example. 5 years ago, I was introduced to a Stanford professor, legit Stanford professor, like almost like 70 something years old. And oh, you have a startup? Yes, one of our startups. We're going to scale them here in Silicon Valley. Okay, this is the spreadsheet for you. You can choose from 50 mentors. It's like mentors fair. Just like, yeah, I recommend like 4 or 5 mentors. You just choose, just allocate like 0.25%, and you're in a great shape. Then you can go and raise money. Oh, excuse me, can I check how many startups are attached, on average, to those golden mentors? 20, 30? Do they really have time to mentor them?
Yeah, that's a good point. Yeah, you see that a lot, and especially in 2017 in the ICO craze, you'd see all of these mentors and advisors to all these companies, and same thing.
Same faces, same
Yeah,
faces.
yeah, it's faces on a website. Yeah. Okay, so Alexander, you mentioned something interesting before. You said that actually you don't have an entity, right, for the company. It's
Yeah, right.
yeah, okay. So one of the things that's very challenging, I think, in raising in Web3 is there's some unique intricacies, I think, as a founder in Web3. So things like, can I get a bank account for my company? And you might think that that's easy, but it's actually not as easy as it might sound. And we're based in Singapore. We don't even have a token. And it still was challenging, even in a place like Singapore, for us to open a bank account. So, there's a number of different things to it, especially if you're going to use a token, making payments. So Alex, in your perspective, how should a founder think about the regulatory environment and all of the laws and the rules and like where to base, your company? And I think this is a really important part of like operating successfully. So, what have you learned along the way?
So it's really important, and we were lucky because in our team we had an advisor who's deep in the legal sphere, and he's like a crypto anarchist, but in his education he's an international lawyer, and he's in crypto from 2012, and he leads us through the way to be real DAO. For example, he imagined the worst situation. For example, we become big, and then the SEC executes us, and what we gonna say them? How we made our solutions, how we spent money, how was DAO governed. So all these questions we ask a kind of role game, like scary sec, and then we are talking with them. So that's why we are prepared for different situations, and all the documentations, constitutions, decision-making processes are prepared
Okay.
in advance. No, not just we are named a DAO, then we have a multi-sig, and that's all, but not.
So it's been interesting. If you look at the way DAOs have been treated in some of the major jurisdictions, like in the U.S., for example, you're getting mixed signals where I think it was Wyoming and maybe another state, they've legalized the DAO structure to be like a legal entity. But then, recently I saw that one of the regulators is going after a couple of DAOs because of the decision-making process, and it's not as decentralized as
Yeah,
maybe
right.
it should be. So, do you have anything you would like to add or any thoughts on this particular side of DAOs?
The centralization of decision making is the main point we were thinking about. That's why we introduce more and more community members into decision making, and also they are included in our multi-sig to sign transactions. So when we distribute tokens, when we make on snapshot different votes, and that's why we move steadily to attract more and more community members inside it. Of course, when we started, there were 4 people who started the project, and then we grew, and now we have several thousand community and active. Not so many, but they become more and more active, and especially because we are in bear market, we are really happy that they are with us.
Sir, did you have anything else to add on your experience over the years with startups, and maybe not with DAOs directly, but how do you navigate the regulatory landscape and make the best decision as a founder in Web3?
Yes, of course. There are some like red flags for any crypto, any blockchain related projects in certain jurisdictions. And basically, you're based in Singapore. Like a few years ago, Singapore was a kind of close to haven. Now there is an exodus again. So, and people will be migrating from one jurisdiction to another. Uh, my experience, I've been speaking to a bunch of regulators um, in various jurisdictions, and I was an advisor to a couple of think tanks, And basically, what I see now, there are only two countries I know personally. I wouldn't say I can recommend, but I know personally they try to find the right, angle to attract the right money, the right projects. Georgia is a tiny. It's not a state of Georgia. Georgia is a tiny, whatever city size population, like 4 million people, um, close to Black Sea, and Hong Kong, of course. The recent development, the oldest announcement, next week, the uh, the regulator, like regulators, the Hong Kong regulators, like various departments, they are meeting the Hong Kong banks, I think, to deliver that sucker punch to them. I go, guys, what are you doing? Are you going to sabotage our plans for making Hong Kong the capital of blockchain and DAO and everything in crypto? We'll see how it evolves.
Yeah, I mean it's an ever kind of evolving landscape, and certain jurisdictions are going to probably change over time. And there's this idea of regulatory arbitrage too that you've probably heard of, where often countries will use, for example, the approach by the U.S. right now as an opportunity to actually change and become a bit more open and friendly. So I think you're probably going to start seeing that in jurisdictions that want to really push the crypto industry forward and attract founders and businesses to domicile in those regions. So okay, so we got 5 minutes left. I want to talk about a couple more things, and one thing a bit more Web3 specific, kind of to the root of crypto, and that's about the community building, right? So how important do you guys see, community building being in a founder's journey when they're looking to raise funds? Because like when is the right time to start building the community? Is it before you guys go and looking for like a seed round or even angel investing, or should that be part of what you guys or what founders do from like day one? Do you have any insights or anything that you could share with the crowd on the power of the community and what that might mean for a startup looking to raise money?
So my point of view that the community is the main, and especially in Web3, and you gotta build it upfront, whatever you made, and even you have an idea, you can collect in a group maybe 100 of your, maybe not friends, but guys with whom you're in a crypto chats and discuss idea, and that's the way to start building community. And we started from the very beginning, and then when we continued raising, also, there is in your community comes lots of people who are thinking about swapping, make 10x, 100x, and so more. And all the questions become in chat. When lunch, when token, when moon, and so on, all that stuff. And now on bear market, they all filtered out. And also, we found a good approach when we delivered to our community the opportunity to buy tokens as VCs did. So we packed them inside NFTs with same prices, with same vesting periods. And also they like this approach because we offer them the same conditions as, and I think it's a good idea for your community that you offer them the conditions you offer to VCs. It's like everybody dreams about it, to buy on a seed or private,
Right.
not on ideal price even.
Exactly. Sergio, so you said you're somewhat new to the Web3 space. Just curious, what your thoughts are on the power of the community and fundraising in crypto as you see it.
Okay, a couple of words about my relationship with crypto. I bought first Bitcoin, but it was 2014.
Oh wow.
I bought a bunch of Ethers. Same day I met Vitalik in January 2016. But I didn't touch them until November 2017, not because I was smart, because I needed money. I got an offer to acquire a company. I go, oh, where's my liquidity? Wow. It took me 2 weeks liquidating from that stupid Coinbase platform my money. And I never touched crypto again. So Web3 and how people raise money within Web3, half a year ago, last year, I would say the hot topic within that community building was enthusiasts. We need more enthusiasts. Oh, what do you mean enthusiasts? Those freebies hunters, the airdrops hunters, these kind of enthusiasts, they just like, they jump from one airdrop to another airdrop. I see a real evolution now. So people start looking for real incentives, how they really potentially can incentivize their community members and make their not just like enthusiastic advocates, but real users and partners.
Excellent. Yeah, good words. Thank you, guys. One of the things that is very interesting about community and something we've experienced here as a startup that's starting to grow and scale a bit is organically running into people who are using your platform or your product and like, oh, hey, you built that thing that I use. Like, so that's pretty cool to see people in the real world like actually using the products that you build. And okay, so we're just about done here. Any final thoughts or words for any last bit of advice you'd like to imbibe upon founders in Web3, maybe in 10 seconds or less?
I think you should first, when you raise, think how the capital will be managed. To give the freedom to VC, not to lock them in for years. And if you offer them this opportunity, I think they are more likely to invest you to contribute in your project than just to lock on a smart contract for 3 years, 5 years, and sitting on bullish when you can sell and sitting on the bear when it's dumping.
Interesting. Yeah, that's a good point. And Sergio, did you have anything you'd like to add?
Fail fast, no retreat, no surrender, be that startup Spartan.
All right, and thank you very much. And with that, we will conclude this talk. Everybody in the audience, thank you for listening, and I hope you guys have a great rest of the conference, and we'll see you around today. Thank you.
All right, thank you very much, our speakers. So let's have one group photo together.
Sure.
All right, so please look into our photographer in the center.